Hey guys, welcome to another Dow Jones update from Charting Star. I'm Joe. It's Monday, the 5th of September. It's a labor holiday in the US, so these markets over there are closed. So we have a more detailed look at the Dow Jones. I got 5 charts for you, starting from a 4-hour time frame all the way into a monthly. And we're gonna hop into the 4-hour time frame. Just two things which are very important. The first one is that trend line here, which connects that low we had in the middle of June, and it connects with that low in the middle of July. And we came down on Friday evening and hit that trend line very precisely and bounced off it. And it also fits with that little cycle we have here. And there might be a little upcoming rally for like 2 to 3 days into the end of the week before that thing probably turns around. Have that trend line, have that in mind. Once it breaks, there might be a larger sell-off in the US. So yeah, keep that in mind. And also keep in mind that Jerome Powell speaks on Thursday before the markets open. I think it's half an hour or 20 minutes before they open, so have an eye on that. That might cause some violent moves to either side. We're gonna hop into the weekly. Most of you know this chart. We have like weekly cycles in here. And down here you see the volume. By the way, it started to pick up since we made that top in the middle of August. And we still have that positive RSI divergence. And now it's a question, if we come further down here and make new lows, is that RSI divergence, is it going to stay or not? So that's something which is quite important if you're looking for a buy in autumn. If we get that sell-off I'm anticipating. And we're gonna stay at the weekly, and this chart here, I have it for quite a while, for over a year. What you see here is, here you see that all-time high in 2018, here you see it at the beginning of 2018, and we have a so-called broadening top. So it's an expanding price level, and it's like a trumpet, which is, opening, price is expanding with time. And I actually left these two wedges in here. This one here caused that major sell-off in Feb, March, and this one here may cause another major sell-off. There's, by the way, a statistical target open in the 29,000 area. But I want you to pay attention on that upper trend line. Have a look what happened. It broke out of there, and we hit that upper trend line from above, and then we broke through it, came up again, and then we broke it to set this or to retest that all-time high out of 2020. And then we came up again and we retested, or we came on that trend line again, and it failed. The market turned around quite sharply now, and this is actually a sign that we probably run a bit deeper. And I have some retracements in here. We're gonna have a look at the different chart there as well. But that's 61 and 50% retracement, and it's not a joke. I mean, we talk about 25 all the way to 27,000 for the Dow Jones. There might be some interesting levels, and I will give you another thing which leads to that on my daily. Actually, we're gonna do the daily in the end. We're gonna have a look at the monthly first. This one here is a log scale. You see here 2000 all-time high, 2007 all-time high. By the way, we made a new low compared to that low here from 2002. The Nasdaq actually didn't make a new low here. It made a lower low here. And now what's happening on that log scale is that there's a rising wedge. And it got already like 5 touches altogether, 3 on the upper trend line and 2 on the lower trend line. There's that first one in 2007, then that sell-off which ended in 2009 is the second one. The yeah, the second touch on the upper trend line occurred in 2018 and the third in 2021. And then we stayed above that trend line for almost a year, and then we broke back into that wedge to retest that all-time high. And now that lower trend line, it's running presently for September at 23,043. I'm not saying that we run all the way down here, but this is a major trend for over 10 years. And I just want you to make sure that you have that line here in view if we get a major sell-off. Yeah, don't forget about that trend line. And I want to go into the seasonal chart first, because this one is also quite important. This is a seasonal chart concerning the midterms. So it's the year of the midterm election, which is in November. And this one worked actually quite well. We marked a low here in June. We came up, actually we went up much further, but we marked now also like that top in August. This one he actually suggested more like a wide range, but we made a top in August and now we came down. And this one here suggested we come down all the way through September. I would say probably into October, because my cycles actually suggest that. And then there might be a turnaround somewhere at the end of September, beginning of October, probably end of October, I say. As I just showed you my cycles, the one suggests in the third week of October plus minus 2 weeks, so it's somewhere in that time frame. And the only thing which doesn't really fit, or which I don't really get, is that smart money flow. And I want you to have a look. That's the latest data after Friday. I mean, yes, they took out their money as well. I mean, the money from the big guys, from the institutions. But the Dow Jones came down even further, and I'm gonna show you on the long term. This one here. This one here shows you the smart money flow starting here July 2019 all the way up to today. And have a look at that rise. I haven't seen something like, not even after that crash we had in March 2020, it came up like that. This is intense. And usually you look in these charts for divergences, and since that smart money flow went all the way up here, and now once we zoom in into, this is only giving you 1 year. I mean, yes, it's declining, but they're not really taking out their money. I thought, that thing comes down even more rapidly than the index. So yeah, that's one thing which worries me a bit, which I don't really get. Probably someone else could explain me to that, but we hop into the last chart. Yeah, the last chart I got for you is a daily, and this one is the most important one. I was showing you that descending broadening wedge like 4 weeks ago. We were somewhere here before we actually touched that upper trend line, which is declining slightly. And I said once we hit that trend line, we probably overshoot it a little bit. That's what happened. And then there is a pullback. And usually these descending broadening wedges are consolidation patterns in a bull market. And my belief is that we are not in a bull market anymore, even DowJones, and it's quite tricky here. Once you measure from the top, the all-time high, to that low, we come out at exactly 19.71%. By definition, a bear market actually starts at minus 20, right? So that's a tricky part about DowJones. Now, why do I come up now with a different theory? It's basically the same thing. That descending broadening wedge, they also could fire to the downside in a bear market. And Elliott suggests a so-called expanding diagonal. So price is expanding with time. And there are certain rules which all of them actually got fulfilled, and they all got met. So, and the first rule is they run usually in zigzags. zigzag down, zigzag up, zigzag down, zigzag up. And there are two types of expanding diagonals, a leading one and an ending one. An ending one is usually consists out of ABC. That's actually the case here. But I think it's a leading one which leads to a much lower low, and this one could consist out of 5 waves to the downside, 3 waves up, 5 waves to the downside, so a 5-3, 5-3 pattern, or that's also allowed, 3-wave structure to the down and upside. So, and that's what I count here. I count an A, B, C to the downside, an A, B, C to the upside, an A, B, C to the downside, an A, B, C to the upside with a very large C. And now I'm missing the last leg, which is leg 5, as an ABC again. It could be also a 5-wave impulse to the downside. We need to wait if that is actually the case. So the first ABC down is wave 1, the second ABC up is wave 2, and there are rules that this ABC, which is the third wave, has to be longer than wave 1. And now listen carefully. Wave 3 has to be shorter than wave 5. And we come to that in a minute. And by the way, the first wave, that's wave 1, and then there was wave 2. It should hit at least the 61.8 retracement, which is also met. And when we come to wave 4, it usually hits the 78.6 and of wave 3, and it did that precisely, as you can see. Here's the 78.6, the top of wave 2, and that is the low of wave 3. It hit the 78.6 on the dot almost. And wave 4 has to be longer than wave 2. That's also the case. And now I said wave 5 has to be the longest on that whole pattern. And since I measured wave 3, which is 5838, so 5,838 points, from here, the top of wave 2, all the way down to the bottom of wave 3. Wave 5 has to be at least 5,838 points. And once you subtract that from the top of wave 4, you end up, actually, that's my, give me a sec. That's the minimum target then for wave 5. And now I want you to have a look on these cycle brackets. And this one here is out of the daily. It suggests actually around the middle of October, and it ran quite accurately. Once we look over here, we got this low, we got this low, we got that low, and yeah, it's actually suggesting a low somewhere in October. By the way, concerning this one here as a descending broadening wedge, once you calculate a statistical target, and that happens once that low here breaks, 29,653, you end up with 26,807, by the way. And that would actually fit quite nicely concerning timing and price in that area here sometime in October, because if this ends up to be an expanding diagonal or a leading expanding diagonal, they like to hit that lower trend line again. And yeah, concerning time and price, that would fit quite nicely. So that's about it. I hope I didn't confuse you too much. Just wanted to share my thoughts, and hope I helped you out with that. I wish you all the best and enjoy the rest of your Monday. Good luck and bye-bye.